Well, thanks for joining the call here, everybody. We have a fairly short and sweet call for you today. We have limited economic data points. Those that we do have are fairly impactful, and a whole lot of Q4 earnings coming out that you'll want to be aware of that could likely drive markets. So we'll jump in. But first and foremost, be sure, if you are not accredited with us already, we can help you close more loans and make more money in 2010. So be sure to check out our lender accreditation program. That will also afford you the opportunity to participate in our consumer leads program, as well as, if you're not already, part of the daily rate advisory and alert service, and a whole lot of other opportunities for you, including some advertising on the website. Again, the rate advisory and alert service for you, but you also have the opportunity to set that up to send out to your own partners, and the list goes on and on. But be sure to check that out and earn your accreditation today and differentiate yourself from the competition. All right, well, last week was a good week for us. We finished the week better by half in points, 50 basis points, and adding to the year's total improvement. And so we started the year on the right foot. And we're up 75, call it 80 basis points, so 3/4 in points improved since the first of the year. And with full trading desks, and we're starting now to see a little bit of turn sentiment too, by the way, but we're getting a sense of the sentiment towards economic growth and inflation. And the optimism for economic growth and the threat of near-term inflation has subsided quite a bit over the last few weeks, certainly since mid-December. And Fed funds futures have reeled way back in, and the likelihood of a rate increase or rate hike from them is certainly not until probably this time next year by most accounts. And if you remember, the Fed beige book that we reported on last week also reiterated this, and I believe they forecast that we don't see any core inflation issues for at least another 24 months. So good news, mortgage pricing has moderated. The tape is still bearish for bonds right now, and so we're waiting for more data, which we could get this week, that could turn that tide. So let's take a look at what we've got coming up. As you know, today is a holiday, so the markets are closed. And tomorrow, Tuesday, we have no economic data points, but we do have Citi reporting their Q4 earnings, and that certainly could be a market mover, as well as really this week. As kind of an overview, as you look ahead here, you'll see that all the financials, the big ones, are reporting this week, and that could certainly be a market mover, along with, by the way, a whole host of other Dow components and companies. And so this, our suggestion is, while we go through these key data points, there aren't many, but what you'll really want to watch this week is we presume the stock lever will be in play, and you'll want to watch the stock market for your canary in the coal mine as to where bonds are going to go, at least this week. As you saw last week on Friday with J.P. Morgan reporting, and while their earnings were great, they did still express concerns going forward for loan loss provisions, especially in the consumer and housing side. And so that brought that stock back, along with other financials. We're down 2 to 3%. And so we'll see how this week looks, with Citi kicking that off on Tuesday. On Wednesday, we'll get Bank of America, Morgan Stanley, and Bank of New York Mellon. So it'll be a very impactful day in terms of financials reporting earnings and how that will impact the stock market. But we'll also get, of course, our weekly reading from the MBA on mortgage apps, and pretty low, frankly, on how that impacts markets. But at 8:30, we get two reports that could be impactful. We'll get housing starts and permits. And typically that's a low to moderate data point, but as you know, in this environment, with everybody watching very closely for cues that housing's recovering and stabilizing, there's a lot of jittery folks in the market, and that can certainly be a mover as we make our way through this economic recovery. So stay close to that one. And then also at 8:30, we'll get PPI, which attempts to measure inflation at the wholesale manufacturing level. You know, last week we got CPI, and that will tend to be a bigger market mover. But anything right now that gives you a view of inflation, it can definitely be a market mover. Now, one thing we would caution on PPI, as we've noticed over the last few times this has been reported, it has reported some moderate, by the way, inflation. But one thing we have noticed is that has not been passed through to CPI. But traders will look for that. If it's a hot number, expect some weakening in bonds. If it's a good number, meaning inflation is lower at that levels, then look for bonds to improve that day. But again, this is at the wholesale level, and we have not seen much pricing power in terms of companies being able to pass on the pricing to consumers, and that's why you're not seeing much of you're seeing a disconnect between PPI, which has shown some inflation, versus CPI, which has shown absolutely none. And then the day's over for what we get on Wednesday. Then Thursday we'll kick off with Goldman Sachs earnings. Certainly can definitely be just as big a market mover as the others. And then we'll get, of course, our weekly jobless claims right before the market opens. And that's expected to come in at the same number that we had last week. And so certainly stay tuned for that. And then we'll get leading economic indicators, which is a combination of about 6 reports that attempts to measure what economic activity will look like 6 months out. It's a fairly moderate watched report, but again, stay tuned. If there's anything that's wildly different than it has been, could be a market mover. And then at the end of that day for earnings or for economic data, we'll get the Philadelphia Fed Biz Index, and that has tended to move some markets over the last 6 months or so. It's been a little bit of market mover. It's moderate typically, but definitely stay tuned for that one as well. And that's about the time rate sheets have been published. So we'll keep you posted if you're on our alert service. Then Friday, there's no data points, but they're all week, and we've only highlighted the financial companies reporting because they are very watchfully close by the market as they go. Likely the market goes, and so watch for this week, kind of the overview of the story, as well. We have some data points that you'll want to pay attention to on Wednesday and Thursday. You really want to watch how earnings are coming out from these financials and how the stocks and the broader stock market is responding to those earnings reports. And if the stocks and the stock market reacts negatively in any way, that would benefit us. If they were really looking at J.P. Morgan on Friday as kind of the bellwether, as that they would likely, if any, have the best report. And so if that holds true, that Chase is the best of the best in terms of earnings and guidance, then this week could be a disappointment to financials in the broader stock market with Citi, Bank of America, Bank of New York Mellon reporting, as well as Morgan Stanley, Goldman Sachs. If those do disappoint, look for stocks to retrace a little bit, and we get some further benefit in bonds. So stay tuned. That's the story for the week. The financials will be driving the market in their Q4 earnings, and watch the data points on Wednesday and Thursday. Appreciate you joining the call. Have a great week, and thanks again.